Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Thursday, June 11th. Firstly to the S&P 500 today, and here we see a continuation of the trend to the upside. The buyers strong enough to extend through the high of the previous day's trading, and suggesting that we have the buyers being committed to driving this trend higher. But if we look at the large shadow on the top of this candle, and the market tested to that important 21.1486 resistance, a previous important area, and we've seen some price rejection from there, and this shadow shows the buyers losing commitment around that level. We also see the formation of a very much smaller white body candle than the previous day's trading. It suggests that a lot of that momentum that the buyers built on that breakout from yesterday's trading above the 2100 level and the Kijun-sen and Tenkan-sen has evaporated. And there does seem to be some doubt as to whether the buyers are going to be able to maintain this momentum and trade the market up through this 21.14 level and possibly through the 21.19 level. Now, if we do see the sellers come into the market and change the trend to the downside, there's potentially very strong support around this 2100 level, with it being a round number and a previous level of support and resistance, and also the Kijun-sen trading there, and then the Tenkan-sen trading just below there, down around roughly about 2097. Below there we also have the top of the Ichimoku cloud at 2093, so very solid support below, very strong resistance overhead. This is a market where we're seeing selling coming in, strong selling holding up at very important support areas, strong buying coming in, being held up at strong resistance. So a market that's not a good trading market at the moment. Moving next to the Dow 30 in a similar type of candle, and a candle that's broken out up above the previous level at that zone of support and resistance, and the breakout has found some resistance at the 18103 level at the bottom of another highlighted yellow zone. So that strong price rejection suggests the possibility of a change of trend, but with this solid support down below extending all the way down through to 17693, there is some doubt about whether the sellers are going to be strong enough to change the trend significantly. The Dow 30 has been moving sideways for quite some time in quite a large range, extending from 18351 down to about 17691, 17603. So what we need to see is resolution either above these levels in a strong bullish manner or down below these levels in a strong bearish manner, and then we could see some dynamic trending price action. Moving next to the Nasdaq 100, and a slightly different candle here, continuing the trend to the upside as we saw with the other indices, but a black body forming, and on the back of this large white body it suggests that the buyers no longer have any upside momentum in net terms between the open and the close. The sellers have actually taken that away from the buyers, and the sellers have closed with control in this candle, and very strong control by closing down towards the low. We did see the market being rejected from the 45.10 level, so combined with the buyers losing commitment at 45.10 and the sellers taking control, there is a greater possibility of a change of trend in the Nasdaq 100 than with the other indices. Now, very strong support at the previous resistance level at 44.83, and if we do see that trend change, we could see some strong support coming in at 44.65, and then down to very close to the top of this highlighted yellow zone, and at the top of the Ichimoku cloud where the Kijun-sen is trading around this 44.50 region. Next, taking a look at some ETFs, and the first we'll be looking at is VEU. It's a Vanguard FTSE All World Equities Index, and it's minus the US indices, minus the US markets. So we're basically comparing US markets to the rest of the world. And what we're seeing here in terms of Ichimoku is a market that's trading within the Ichimoku cloud, so a little bit different than we've seen with the other indices, trading below the Kijun-sen, so a bearish market in the medium-term time frame, but finding some support in the short-term time frame around the Tenkan-sen. Looking at the relative strength against the SPY ETF, which is the S&P 500 ETF, strongly underperforming the US equities markets here by trading down below the lower band when comparing the relative strength comparative. If we look at volatility, volatility is trending up off a cyclical low. so suggesting we could see further downside in this ETF. Looking at the momentum of the ETF, it is trending down quite strongly in terms of momentum, and the momentum, that is the momentum of the relative strength of the ETF to the US equities market, so suggesting that we certainly could see further downside in terms of relative strength. So certainly we would be allocating to the US equities markets and not to the rest of the world's equities markets. Next, looking at another ETF, IFGL is the code. It's the iShares FTSE Real Estate Index, and it's for the world real estate index, and it's ex the US real estate index. So we're comparing the US equities market to the real estate market in the rest of the world and outside of the US, and here we see the market trading down below the each of the Ichimoku indicators, trading down below the Ichimoku cloud, importantly, so a bearish market in the longer term time frame, rallying to the Tenkan-sen indicator to find some resistance there, and on the back of a doji type candle there is an opportunity for the sellers to come back into this market and trade the market lower. Looking at the relative strength against the SPY ETF, the S&P 500, trending down very strongly in terms of the relative strength comparative, so very, very strongly underperforming the US equities market, and momentum is trending down as well, so some good solid momentum to the downside, and suggesting that we certainly could see the sellers come back into this ETF. Looking at volatility, volatility is still trending higher off a cyclical low, so suggesting that we could see the sellers return here. Now next, looking at VNQ, which is the ETF for the US. So we're now comparing the US equities markets to the US real estate market, and here we see a very weak market in all three timeframes, trading below each of the Ichimoku indicators. The Chica span is below the corresponding price action, so we have downside momentum in terms of price action. And looking at the relative strength comparative to the SPY ETF, strongly underperforming the US equities markets. The volatility continues to trend up, and it's suggesting that we certainly could see continued downside. So here we're looking at these various asset classes, and it's all suggesting that even though we're not seeing a lot of strength in the US equities markets at the moment, it is the market that we should be allocating to, and allocating away from those other markets, and lessening the allocation from those other markets towards the US equities market. Next, TLT is the ETF we'll be looking at, and it's the Barclays 20 plus year Treasury Bond Fund. So we're looking at the longer term bond market, and we see strong downtrending market in all three timeframes. For the current candle, we've seen the buyers come back into the market, and we've seen this before on a couple of occasions, expecting to find some strong resistance around the Kijun-sen and the Tenkan-sen, trading at 118.82 and 119.42, so potentially strong resistance if the rally does continue. Looking at the relative strength comparative, strongly underperforming, but only just, but still it's important. Momentum in the relative strength comparative is not great, and it's pretty much on par, so no strength to this underperformance against the US equities markets. But if we look at volatility here, volatility is starting to come into the market, and we're moving higher in terms of trending volatility off a cyclical low, so suggesting that we could see some strong selling return into the longer term bond market in relative terms, and certainly we should be allocating away from the bonds to the US equities market. Next to GLD, this is the Spider Gold Trust ETF, and an ETF that's trading down below the Ichimoku cloud, moderately bearish in all three timeframes, trading below each of the Ichimoku indicators, finding some resistance around the Ichimoku cloud, as we've seen for the past three rallies. The market attempting to break out through the cloud on a couple of occasions, but strong selling coming in. So technically not a strong ETF, not strongly underperforming the US equities market here, but we are seeing some moderate momentum to the downside in terms of the relative strength, so suggesting that we certainly could see some selling coming into this market, but still no great underperformance here. Looking at volatility, it's not really doing anything. We have formed a cyclical low, and then the trending price action or trending action in volatility off the cyclical low has been quite weak, and forming another cyclical low in the recent past, but certainly no strong follow through in terms of volatility. Now just moving to the relative rotation graphs, the RRG charts, and using the market analyst program to chart this, and what we're looking at here is the relative strength to the SPY ETF, and we're looking at momentum all combined on one chart. We see here that one of the improvers is the DBC ETF. It's the commodity index ETF relative to the SPY ETF, and it's an improver. It's not in the leading quadrant yet, but it's certainly one that we should be watching. IFGL is beginning to move up from the lagging quadrant, and over the next week or so we could see that rotate up into the improving and then eventually into the leading. SHY, the shorter term treasury bond fund, is in the leading quadrant and is starting to weaken. However, it's losing some acceleration there, and GLD, the gold ETF, is still in the lagging, but looks as though it could be one that could move into the improving. SLV, the silver ETF, as well, is in the lagging and certainly not looking promising at the moment. TLT, the longer term bond ETF, is in the improving but certainly losing some acceleration. It's actually decelerating away from there and looks like it could rotate back into the lagging quadrant, and certainly one we should be allocating away from.